And if you have a phone, or if you have your charts on your laptop or your computers, and if you have multiple monitors, if you're so zoomed in that you can only see a small little segment of price action, how can you fully trust what you're seeing on the next few candles is going to be something that is limiting your trade or putting a cap on it prematurely because you're so zoomed in? You're losing sight of something that would be a longer term objective. Now, I learned that lesson very painfully and costly, losing trades that were winners, holding on to really good trades too long because I had my charts zoomed in too tight. And over years and years and years of just saying, I got to take a step back from this, and seeing the charts better than I do now. Well, not better than I do now, but better than I did then. I'd see it now better because I allow for more information. And also, and I mentioned this several times in my discussions and lectures, and even on Twitter Spaces, periodically when you're in a trade, especially if you feel like you're second guessing it, like if you're in a trade, it's moved, and you just don't know for sure it's going to keep running, step away from your chart. Put your laptop maybe on a coffee table or dining room table. Take a little bit of a distance between you and it and look at it further away. Put more data on the chart and then kind of get a feel for where you are at that moment. Many times it'll give you a different perspective, and you'll see, if you understand how to read price action, you'll see that what you're fearful of, because you're so zoomed in and you're watching that 1 or 5 minute chart and it's fluctuating around a lot because it's zoomed in, and it's causing your brain to pump out this adrenaline and or up to the point of releasing cortisol, which is a stressful hormone. In the last Twitter space, I talked about managing anxiety attacks and panic attacks. And when you're in trades, whether they're profitable or losing, you're pumping chemicals constantly into your bloodstream. And if you are not used to that incurred risk while trading, it can cause you to be, number one, emotional, psychologically amped up, and you're going to make something that is very insignificant paramount. It's going to be a huge thing when it isn't. And typically, for those that want to use a stop loss correctly, we're not concerned about ramming up the stop real quick to lock in anything, because we're allowing the market to move around and gyrate. And you watched the trade this morning that I had a very specific fair value gap that I did not want to see come back into, and I certainly didn't want to see it close that fair value gap. So when my stop was trailed up, it was trailed up to the bottom of the fair value gap that I did not want to see fill in. My annotation in the fair value gap was, it must remain unfilled for me to trust it, because it's a Friday. Everybody else wanted to go short. They gave you the carrot this morning, right at 9:30. They dropped it real quick. Took it below the 9 o'clock low. Sell side was purged. The 6:30 low, purged. Everything looked like it was a sell to anybody looking at that chart. Typically, on Fridays, there will be a it'll be a return back into the weekly range. So what's the weekly range been this week? Down. So it's going to do what? Likely retrace up into that weekly range, 20 to 30, maybe 40% of the range. So whenever I see a Friday slam down after a bearish week, my mind immediately jumps to, okay, we've already hit so many discount arrays, in other words, targets on the low end. It's reasonable to expect this as manipulation. So So that drop down at 9:30 on E-mini S&P, that to me signaled, okay, we're done. But I didn't want to go in there and try to catch a falling knife. And you watched me do that yesterday. That was altogether something different. This could be me reading it as it's a Judas swing. It's Friday. It might retrace back into the weekly range. And if I try to go in there and try to buy the low, and it could just keep dropping. So I required a little bit more. I need to see it get back above the 9 o'clock low. And I need to see it create a fair value gap. And you watched that form. I drew it out. It was retracing back down into that before the 10 o'clock hour. So I accumulated multiple positions using the fair value gap. Stop loss was not rushed up. But once it starts approaching a second target, my second target for the day was 39.40 and 3/4. That level is an old high. We were looking for obviously the public to be arm wrestling smart money. Smart money is going to pressure on Friday the street money. Now, street money sees what all week long? The market's been going down. It's going down. It's going down. In their mindset, they're thinking, okay, it's been going down. Nobody wants to miss out on the move going over the weekend because it's probably going to be lower on Monday. So let's get short. So there's an arm wrestling match from a sentiment perspective. You have the informed money, street money, against those individuals that are just trying to catch up. They missed the move, so therefore they must do what? Do what everything and everyone has done to be profitable for the week, which would be net short. And when everybody dropped the market real quick and sudden, just like that, going into the open, CNBC, Bloomberg, everybody's going to be chattering, oh, futures are down. Looks like it's going to be a ugly morning. What does that tell the retail trader? They better get short. The market's going down. Get ready for it. I, on the other hand, am expecting TGIF. Thank God it's Friday. Okay. What that means is this is a little quirky expression for the likelihood of a retracement back into the weekly range. So the weekly range is being majority lower. So it's going to do what? Retrace back up into that range a little bit. 20 to 30%, as much as 40% of the weekly range. Now, once I see the move start panning out, and if you haven't watched the video I've uploaded on Twitter, I've already shared it. It's been recorded. You can watch me manage it. I give you my views about it. And it's actually trading in a high resistance liquidity run. Now, you probably heard this term, low resistance liquidity run. That's what I teach my students. That's what I like to trade in, those environments where it's just really, really easy to get in, get the stop placed. It quickly runs to your profit objectives and partials. And usually the trade's over like pretty quick. High resistance liquidity runs have much more deeper retracements. They tend to consolidate a lot. They chop around, then move a little bit, go to a new level, then consolidate and chop and then move again. That is a high resistance liquidity. It doesn't mean, obviously, you can see I can find profitability in that. But I try to steer my students when they're first learning away from these market conditions. Now, you might think, and I've read several people over the last 2 days, they're chit-chatting in tweets. They'll say, I can't really learn from these videos when Michael puts them up there with the music. It doesn't serve any purpose. Well, you're wasting your time then, because you need to go into the examples I'm showing and study why those areas are being used for me when I'm taking a pyramid entry, when I'm building my position larger. Why was I buying or selling where I was selling? Why was I taking my partials where I was taking them? Look at the daily chart, the weekly chart, the 4 hour, the 1 hour, the 15-minute time frame. Don't just look at the example I'm showing with that 1 minute chart and think, well, that's all there is to it. You're ignoring the opportunity for you to discover much more about why I was doing it. Because it's not only on a 1 minute chart. The 1 minute chart is just allowing me the medium or time frame to engage in. It's not just the 1 minute chart. Okay, there's other things that are there that you need to understand that's been taught on this YouTube channel. And by doing that work of going in and saying, okay, he showed this, so he took the initiative to do this, because it's not showing off. I can do a better job of showing off. This is me teaching you by example, showing you executions, trade management, and also showing you, like today, when we were in the 10:30 time window going into 11 o'clock, it was stalling just below the 39.40 level after it had already swept it. I took my partial, 5 contracts above that, took 4 contracts off at 39.33 and 3/4. So I had the majority of the trade already booked. Stops were rolled. But because once I roll my stop up and I'm long, I've taken 2 partials. I'm already, in my opinion, in a position of, I don't care. I have a free look now. I have a free look to see if it can go to my terminus, my best case exit strategy, which would have been 39.45 and a quarter. So if it could get to that level, that would be my morning session. I'd be done. As the market consolidated between 10:30 and 11 o'clock, I was annotating saying, okay, it needs to move now. You can see it in my annotation. So, okay, it needs to do this right now. It needs to do this. I need to see speed. It needs to be sharp. It needs to run higher. And there were several times that I wanted to see that happen in price, and it didn't do it. So I had 5 contracts remaining on the position. So what do? Start scaling off 1. So what am I doing? I'm managing, number 1, trade expectations. I was watching the guy I've turned a lot of you guys on to, Patrick Weiland. He's live streaming over there on YouTube. And I was watching him, and then I had to leave, but I was listening to him as I was driving. And he was squirming. And I'm not making fun of you, Pat. I'm just saying this is typical. When you want the market to run in your favor, you can't stand it. Like, it's like, come on, please, 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 go for me, go for me, go for me. The best thing you can do if you feel that, and it's not going to feel like this is the best thing. It's not going to feel like it's the thing you should be doing. But if you have enough of a position to take something off, that's what you do. And I know he doesn't like partials because he thinks it's not worth having the initial risk. And I understand that's the same argument that other people on Twitter and YouTube and Facebook, they have the same opinion. But partials profit. Okay, I don't understand the argument. If you get stopped out, that's a partial of your equity that you just lost. I mean, think, folks. Think. No, I don't want to take any profits. That doesn't make any sense to me, to take something out and pay myself for all the time and effort and energy and attention I've placed on this engagement here. No, I don't want to do that. It's all or nothing. To me, that doesn't make any sense. That makes absolute 0 sense to me. Are you going to work Monday, Tuesday, Wednesday, Thursday, and then say, okay, I got a flat tire. I can't make it to work on time. I'm tied up. Can't get to work. I got to call out on Friday. And then, hey, boss, listen, I couldn't do Friday. Just keep everything I put in. Just, let me go home with nothing. That's what trading. That's exactly what trading is without taking partials when you're given the opportunity to be paid. That's the equivalent of that. Does that make any sense? That's asinine. You are going to struggle when you first start learning how to do this. So it is advantageous for you to know where you're trying to take profits. So that way you know what it feels like. You get accustomed to doing it over and over again. And that's why I teach and I preach that when you're new, you should strive to get 5 handles. Not that that's your entire career. That's not what I've never said that, but you can make a career on that. Don't let anybody tell you you can't make a career on 5 handles, because I'm going to tell you something. I could do that every single day and show you that account, a live account, a funded account, Robin's Cup, whatever the fuck you want to do. I can beat Robin's Cup with 5 handles. All you got to do is find your ass in that leaderboard. Okay? That's all I'm asking you to do. Don't waste my fucking time talking. Don't talk. Get up there and then talk. Because once you call me out and you tweet to me, everybody's going to fucking see it, clowns. And I will rip your shit apart. Sorry, I had to let that out. But you have to have a target, a goal, something. Because here's what you don't realize. You might have a good edge. You might have a good role. You might be dialed in, and your attention to detail is keyed up. You know exactly what you're doing. And you've been consistent for a day, a week, a month, a couple months. And you get this feeling like you're King Kong and you can't do anything wrong. Then you get into that trade that's going to come. And you're going to hold on to it. And it's going to build up a lot of unrealized equity. That means on paper, unrealized potential. If you close a trade, you would get that, but you're not going to, because partials are stupid. That's what you've been telling yourself, and you don't want to subscribe to that. And I have watched my own trades. I've watched my students' trades, and I've watched people that don't trade anything like me get real close to their objectives. And I listened, and I observed, and I watched them arm wrestle the public, because people with more insight than them, more experience than them, simply said, why don't you just take something off here? It's struggling, and you're flipping out, and you're losing your mind, and you're stressing out, and you're all over the place. You're animated, can't sit still, and you're live streaming. That made me anxious, and I don't get anxious in the marketplace, but that made me anxious watching this person squirm over something that is such an easy remedy. You just take something off. That's trade management. That's risk management. And it's also emotional management. You have to manage the person that's pushing the buttons. And money, fear of losing, fear of judgment publicly. Listen, I'm going to call a move, probably a couple of them this year, and it's not going to work. You think I give a shit what you think if I do it wrong? I don't care. I'm going to do it more times right than I'll do it wrong, and it's okay. And I want you to understand that you're going to do it wrong, and because you don't know for certain. You don't know for certain it's going to move where you want it to. I'm proving with my annotations that most of the time I'm right. But today, I wasn't. Even though I was wrong, it didn't go to my 39.45 objective. Even though I was wrong and I saw a fair value gap that I wanted to see, remain unfilled, it filled in, and that was a warning sign to me. I was like, okay, it needs to rip up to that 39.45. If it came all the way back down there, it needs to vault, go right up there, have no difficulty whatsoever. And I've mapped out 2 times where everybody that would just simply watch the first couple of videos of my 2022 mentorship and think they got it all figured out and they don't have to watch anything else. I'm going to tell you the folks that took shortcuts where they're going to see the fair value gap, the shift in market structure, they're going to try to go short. And I'm telling you in the chart, that's not it. Because you didn't watch the entire thing. You didn't back test. You didn't read price. You didn't study. You didn't do any of those things. And you're trying to sell short today. Over and over and over again, wrestling, arm wrestling, because you have something to prove.